welcome to the closing beat, everybody. Happy Thursday. How we doing out there? Hope you're having a good day. All is well. This is a quick stock market update show that we do. We are financial advisors here at Jazz Wealth, and no marketing today. I'm just going to say thank you to all of you who have given us a shot, transferring your Roth IRAs, rollover IRAs. Been busy, but I appreciate the opportunity. We're a small company. We manage our own portfolios, and to be better than everybody else, we teach you along the way, no matter what it is. Our class tonight, actually, for customers, we call it Wine and Wealth. We're going to cover trading strategy, and one in particular for trading in a volatile market, because the markets are a little bit volatile here and expected to be volatile. And I realize that a lot of our customers give us their retirement accounts, and we handle that. But they like to trade, like to be out there playing the game. So want to make sure you guys are dialed in with that. So we're going to go over a strategy later tonight. Also in the dojo, we have videos, a lot of them. You just type in trading plan. I've gone over a lot of different trading plan things, built spreadsheets and everything. Anything I could do to help you guys with your dough, of course, we help out with here at Jazz Wealth. So I guess that was marketing in a little bit. Anyways, we'll move on. Happy October, all right? October 1st here. It's going by quick, man. Thankfully, I think a lot of people want to get rid of this year. If you look at the stock market off to your right-hand side, you got slight gains across the board there. Nothing impressive, right? Just nothing quite impressive there. You got Nancy Pelosi, Steve Mnuchin, Treasury Secretary, still talking it out. The market's clearly waiting and hanging on every word there. If we go over to the charts here, we can take a look at the S&P 500 right around the 50-day moving average. There's no talks or no actual deal. The two claim to still be far apart there. And you know why they're far apart, by the way? Just a quick thing. Why did they come up with a stimulus one package, the first one, so quickly? Why was that? It was because the markets were plummeting. The markets were on the way down. The economy was on the way down. There was a sense of urgency. The stock market actually goes higher on talks of a stimulus. There's no pressure. So they can be further apart. There's no need to compromise. And so that's why I kind of think you're not going to see a stimulus here. It's just not going to be anything that happens. The elections, you can play all those games and everything, who takes the House, Senate, and all that great stuff. So there's no need for either side to really budge here, and that's currently what's happening going on there. But if you look at the stock market, that's what you got for the day. We'll start with the NASDAQ, because that was your best performer here today, up about 1.5%. It's up about 33% year to date. Look, year to date, you can take a look at some of the stuff here. Zoom, the biggest gainer year to date. Tesla is the second place winner, believe it or not. I would have thought that would have been first, but Zoom with a 600% gain there. Apple was the biggest contributor so far this year, but today semiconductors really stood out as the area. I've been pointing out semiconductors over and over again to you guys. Pointed out a few that bounced off 200-day moving average. One that's interesting today, NXP Semiconductors. NXPI is the ticker symbol if you want to look. Just kind of an interesting move. Big gap up today, gained about 5% on the day. Strong day. It looks like it's headed back towards highs there. You got SkyWest also. Was one of the bigger ones. No, it's not Skyworks. Skyworks, not SkyWest. I'm thinking of the airline. Skyworks, there you go. Semiconductor moving back towards highs there, looking strong. Microchip had a good day again today. A lot of these semiconductor names have been really strong lately. The industry in general have been very strong as well. Got to point out Netflix in the NASDAQ there. That's obviously a big help today with a 5.5% gain right on the dot. Good day for Netflix and some of the gaming stocks as well if you want to take a look over there. If we go to the S&P 500, there you go. Slight gain on the day, still struggling with the 50-day moving average. That's the blue line on my charts if you're taking a look. 6% gain year to date, and that 50-day is still the struggle. Outperformers today, we're going to be retail again. Got to notice these themes when they pop up. Retail, retail, retail. We keep seeing this little by little. Etsy higher today, 8.25%. Look good there. Others, though, as well. Limited brands hitting new highs. We talked about that the other day before it hit new highs. Looking like it was waking up. Oops, there you go. We'll go over here and type in the Gap, up 5% on the day. And Darden Restaurants higher as well. We did a post in the research section. If you're not one of our customers or can't be or don't want to be, in the research site, we've actually got a post coming up here. Should be published here tomorrow. Deeper look at some of the restaurant supply companies, because the restaurant companies themselves, Chipotle and Darden and things like that, it's kind of obvious, but we're going to go a step further. I covered a little bit of it there for you yesterday. But nonetheless, the retail stocks, whether restaurant or not, they did well today. The weakness came all in the oil space. Worst performer in the S&P and the worst performer in the oil space today was Halliburton, down 7.33%, getting a little extended. Valero headed back to new lows there, 5.5% down for Marathon Petroleum. Hess, Williams brands, Concho Resources, NOV Resources, all lower on the day. Schlumberger also lower. beatdown in this area of the market, largely because of the price of oil. We'll cover the price of oil here just a little bit later. Hey, if you're one of our viewers out there, thank you for watching. Bottom right-hand corner of your page, we got 3 FinTips videos this week, 4 reasons not to invest, and then a few reasons not to. Year-end tax strategies we went over yesterday. Got a lot of communications on that, emails and phone calls and whatnot. So hopefully that helps you out. And then tomorrow we're going to cover what happens if you owe the IRS a lot of money. You don't often hear people, or they won't ask that question because it's embarrassing. Okay, whatever. But what do you do? What options are available to you? What plans are the IRS currently testing and rolling out so that you can stay out of their way? All right, let's go to the sector breakdown and talk about the stock market today. On the right-hand side of your screen, you can actually see the different sectors. Would be probably misleading if we didn't start with energy. Once again, the weakest sector of the day. We've gone over some stats on that on Monday to show how energy has been the worst performer 1 out of every 4 days looking back this year. So kind of freaky how the stats are playing out perfectly there. Oil was the big weaker one today. Was down 6% at the lows today, closed down about 5%. You got a number of news out there for oil in terms of demand being lower than expected. Jet fuel demand, which is a big component of that, was expected to remain at lows until next year, and just overall negative narrative for oil today. So those stocks all clobbered. You got consumer discretionary that has been waking up little by little there, up 20% year to date. There was a lot of good that happened in this sector today. TJ Maxx waking up. Now, these aren't stuff you go jumping over, yourself to try to get in. They're just starting to wake up, starting to look a little bit better. If you own them, you recognize that they're moving towards the top of your list, not necessarily something to dive into. Target did well, but also it's a little extended, so it didn't finish at highs. See how it just kind of had a good morning and then you saw profit taking? That's because of this great move to new highs there. It would be normal to see that pull back just a little bit. You got Lowe's also getting back towards highs as well, very strong. I could go over a bunch of them, but in the consumer discretionary space, that to me stood out as one of the better areas today. It was the 3rd best performing sector of all of them today. We haven't talked about REITs in a while. REITs are getting back above the 200-day moving average there. Still stuck very much in a messy range. If you've owned REITs for a while, you've had to been patient and just suck up that dividend because they have been a bit of a mess. Lots of changes going on in here. The REITs sector has about a 3.2% yield somewhere in there. Now, if you're looking at this sector trying to find ideas, I'd focus on the stocks with the larger weightings. I can't tell you what to do, but look at the ones that are stronger than the REIT sector. So here's Equinix, right? You got REITs basically flat, and you got Equinix just trending higher ever so slowly, very steadily. You got Prologis, PLD is a ticker symbol, very strong, back above the 50-day moving average. That stands out in that category. Also one of the more heavily weighted in the REITs sector. American Tower, not as good, but still in there as one of the stronger ones that's pulled back here recently for you, maybe something to look at. And Crown Castle might be one of the stronger ones in the short term with its move over the last couple days back above the 50-day. Nice consistent uptrend there, or at least starting one. So maybe that's a place to look. Not a sector, but a commodity here. You got gold recovering a little bit, up almost about 1% on the day. And I found this interesting. Volatility was higher all day. Why would volatility be higher all day when the stock market was basically just higher all day? What would be the key there? People expecting elevated volatility, not only because of the elections and everything, but in the short term because of the stimulus talks. If they just fall apart, you have a reason for volatility. There's that little bit of a hedge in there right now, which you can see by looking at either the VXX or the VIX futures, however you want to look along at that. Bitcoin today had a big drop midday. Did recover a little bit of it, but here, if we look at a 5-minute chart, out of nowhere, Bitcoin just started to sell off rather aggressively. High volume. This is the Bitcoin futures we're sharing with you here. Slight recovery through the end of the day, but Bitcoin waking up. It's been sort of a snoozer over the past couple weeks. Maybe this is the start of something for all you Bitcoin people out there. Hey, let's move on to notable new highs for the day. There were 12 new highs for the day. Now this list is going to be a little different. You look on the list, you say, well, it looks like the same stocks that have always been there. Got a little bit different comments today, so I left some of them. We're going to go over to Perkin-Miller. That's how I say it. I know that's not the name of the company. Perkin-Miller there hit new highs, but it's been up and it's been on the new high list for a number of days. It's also had a great little breakout there. This is one that you say, well, I'm not chasing it because it made new highs. I'm actually hoping it pulls back. Give me a little pullback on something that we already know is strong, that already has good volume, already has good buying interest, you're looking for that slight discount in the short term there. So that's really why that one's on the list. Danaher is going to be the same thing. Picture perfect, beautiful little breakout there. We walked through it over the last 5 days for you on the show. And now you're saying, okay, pull back. I didn't get a chance to participate, or maybe you want to add more shares. So you say, well, let it pull back a little bit. Give me 210, give me 209, somewhere in there. Scare everybody for a little bit. That's why that one's on the list. Dollar General's had a good move here. Not really extended, but Dollar General doesn't get extended. It's not one that just blasts off away from moving averages and shocks the world and makes headlines and everything. It's pretty steady. So this one as well. Slight pullback might make you happy to participate in that uptrend. That's why that's on the list today. Lennar, nice breakout, clean breakout in a strong sector. Yesterday we highlighted the strong sector. The day before we highlighted that to show you how that's something that was waking up. We own a number of stocks in the home building sector and, of course, participants in that space. And great. So you want to see that continue. This is not extended. This is just getting started, hopefully. And so that's why that one's on the list. And lastly, you got Fortune Brands as well. That's a clean breakout in the same space. Well, there you go. There, did it load? Yeah. You got Fortune Brands in there as well. Clean breakout, like I said, and just getting started. Today, you saw a little bit of a pullback, and what happened? The buyers came in and bought that pullback only one day, so that gives you a hint of what's to come there. There were no new lows, and so that's pretty much it. We can move on from there. We will talk about our watch list here today, because we've got a post coming up in the research site. It's actually going to post the second the show is over here, the best sectors, best stocks broken down by the best sector. I'll share a little bit of it with you so I don't scare you if you're looking around here. Let's go over here. Here is the October sector performance of each individual one, and I used ETFs this time so that you could look these up if you like. I have no preference or bias towards any of these. These are all the same brand of ETFs. It was just easy for me to go in there and do these if I use the same brand and not bounce around. Anyways, if we look through the month of October, you could see every one of them ranked by how often they're positive. So financials and utilities rank as the best performing sectors in October, 76% of the time. Technology, not quite as good, but has the best returns, both on a median and average basis. If you take a look down the list here, basic materials, they are not the best, right? September was a weak month for them. It actually panned out exactly as the historical average does for basic materials. Positive only about half the time. It's a coin flip there. Median performance is very, very little. Energy, well... You would imagine that's going to be negative after today's start, but we'll see how the month goes 53% of the time. So what we did, we put that list together, and in the research site, you probably can't see all of this, but I posted it there for everyone to break down the sector by years. I had to cut it off so you could see, but we actually showed all the performance. Why do we show that? Because it helps you with volatility also. Now, if I go back, we know financials are the best. So rather than letting all this data go to your head and get confused and all that, let's take a look at the best performing sector and look for stocks inside of it. So we know stock market, sector, stocks, right? We're just analyzing from the top, working our way down. So now we're looking at financials. Here we go. Okay, well, let's just a quick thing. Let's just pull the top 25 stocks in that sector and see what sort of stats we can find out about individual stocks. So here we go. If I can click the button, here we go. We'll go through the list as you see them on the screen. S&P Global, going over to the exchanges here. By the way, if you want to see the full list, go to the research site. You can join us there. It's $13 a month. Hopefully you enjoy that. S&P Global up 76% of the time in the month of October. 5.31% is the median return. It is much stronger year to date than the financials. If you were to look at financials, you don't see the same picture. See how they're a little bit weaker, but if you look inside of it, you've got the S&P Global doing quite well. Sticking with the exchanges, we'll go over to the Intercontinental Exchange, up 86% of the time, 6.17% median gain in October. This one only has about 13 years of data, though, if you're in the research site and you see a couple blank spots because of when they went public there. This is also one of the least volatile stocks in the financials with the best returns for the month of October. So if you don't like volatility or you're concerned about volatility, by looking on the research site and seeing the type of performance you get in October, you very quickly could just eyeball it and say, okay, that's not a very volatile stock no matter what happens there. All right, moving on. You got Goldman Sachs there in the mix next. Can't get over the 200-day moving average. This is one of the best performers in October with an 88% 88% of the time being positive there. 5.8% median gain overall. Looking at some of the bigger names that you might be familiar with, Morgan Stanley sitting on the 200-day moving average. It's one of the other top performers 88% of the time. 4.33% median gain and a 4.5% average gain as well. So this one a pretty consistent but sizable performer throughout the month of October. Wells Fargo, I had to put it in there. I just wanted to see where'd Wells Fargo land here. It's been a beaten down stock, horribly beaten down. Well, October is positive 75% of the time with a small median gain of 2.34%. It's also on a 4-year win streak for the month of October. So the last 4 years, it's been positive. Could this be year number 5 there? Go over to a couple different names just to cover a little bit of everything for you. Capital One had a decent day today. Only 59% of the time is this one positive in the month of October, so not really one you're going to run to and try to bet on the stats there. It's down 5 of the last Octobers, by the way, so not really its best month for that stock. Bank of America, 65% of the time it is positive. However, the average, what was it? It's one of the only names with an average loss through the month of October. So even though it's positive most of the time, its losing years drag down the stats a little bit. Average loss of just about 1%. It's also lost 5 of the last 8. And that is kind of an interesting way to look at a number of stocks inside of a watch list. I hope that helps. And if you're one of our research members or you want to join, jazzwealth.com/research, and you can join for $13 a month. It's the type of stuff that we like to post rather than tell you what to buy and have, hey, let's look at what you're buying and when you're buying it. We like to show you how you find ideas, and then you can make decisions from there based on stats rather than based on emotions. So I hope you enjoyed that. Okay, let's go over to, I don't really have a lot for stocks in the news, to be honest, today. I don't, I can't even type the symbol. Allstate, which, by the way, is one of the weaker performers in the financial space through October. That's really my news. That's all I wanted to share with you there. You got some news in Tesla today. Was a slightly higher overall. Is it? Yeah, just a little bit higher on the day. I don't know why it's not loading there, but you got that going on. Carnival Cruise, we'll just go through. You can see the other ones on the list there. Carnival Cruise down 1% on the day. CDC extended the no sale ban, but they only extended it to the end of October, whereas they were expected to extend it through the rest of the year. So that's good news for them. Carnival Cruise has already canceled their cruises around the country, except for Fort Lauderdale and Port Everglades. Those are some of the main ports down here in Florida. Those are going to be open. They're going to start hopefully cruising in November and December there. That's their plan anyways. But everywhere else, like New York and the rest, are all canceled through the rest of the year. So I hear that the travel agents are all getting those updates as we speak. All right, I'll take your questions if you have them, see what we can do here, and I'll get ready for our Wine and Wealth class tonight. I already got a head start, as we typically do on Thursdays. Tonight we're covering trading strategy for active and volatile markets. Got one simple thing. We're going to go over there to the classroom, actually. It's not going to be in the speakeasy, so we'll see what we can help you guys out with. I love it. You like the short reads in the research section? Yeah, we're trying to have a little bit of mix of both. Like sometimes we go for it, sometimes we make a quick point and then get out of your way so that everybody gets a little bit in there. And now you can actually thumbs up the different posts. So if you like them, hit the thumbs up. We're kind of gauging that to see, like, what do you guys like to see? Are we on track with stuff that we can keep researching, or see what we can do for that? I love it. Can you do what was the question? Can you do a monthly video or post on 401k rebalancing for customers? Monthly video post on 401k rebalancing, like if you should rebalance or not. I've done educational videos on them, like how to determine when and things like that. But if you're saying like when to rebalance, hopefully it's automatic and you can set that up either monthly, quarterly, or semi-annually or annually. You pick the shortest option, whatever one they give you there. But if you have a question about your 401k, of course I'm happy to help if you're curious if you should be rebalancing or not. But first check to see if they have the automated feature. That's the easiest thing to do. Pick the shortest time frame that they allow you to do it. There should be no costs or anything for that. Yeah. You like Carvana? Yeah, they're killing it. They're a little bit maybe, we recently bought 3 cars through Carvana just over time. And they're maybe a little bit more business than they can handle, because the first one went fine, the second one was okay. The third one, they just didn't charge me for. And I had the car for like 4 months and no bill, no communication. So I wasn't going to say anything, but yeah, I don't know. Anyways, the stock, really good. Actually, great performer here. There is competition in the space. Of course, CarMax has made their adjustments as well. Doing great, I think, for competing against Carvana. But the stock's still in growth mode, super hyper growth mode there. You can't argue with that. I think at some point you got to start looking about when you're going to maybe scale out with some of your profits and maybe lock in some of your gains. Maybe you could pull your principal out depending on how long you've had it there. Yeah. Why is Nordstrom having a good day? All retail had a good day today, so it could have been a little bit of the exchange fund type buying, the sector mutual fund type buying going on there. You know, it's a tough one unless you really believe in Nordstrom working things out. Is it okay to roll over a traditional 401k to a Roth IRA? You wouldn't do it in those steps, in that like one type shot there, but could you? Yeah, I mean, you could. You're going to owe taxes on the amount that you do eventually convert. Convert's the word you want to use. So it goes 401k to IRA, then you convert to a Roth IRA, but you will owe taxes on that. So is it possible? Yes, but of course you want to measure those numbers before you do anything. I know. Yeah. Cool. Hopefully that answers your question. If I missed any questions, I'm not very good at this here. The window they make for my questions is smaller than normal. Yeah. Nordstrom, huh? I like it. What's the average 401k year to date? I don't know that there's a way to even track that to get an accurate number because there's so many choices that vary inside of there. Depends on how you're actually investing. Some people invest, you know, gung-ho, swing for the fences. Other people, you know, have to take it slow and guaranteed funds and things because they have well, retirement coming up. Bed Bath & Beyond, from what I saw earlier today, was their digital sales. Everybody excited about their digital sales. They've been trying really hard to move over to that. If I could take a look, back to college news, that's kind of seasonal. Let's see, couple upgrades today. I like it. Oh, surprise profit there. Good for them. Yeah, earnings there looking good. And a lot of it due to their digital sales. Revenue $2.7 billion versus $2.6 billion expected. They made 50 cents versus a loss of 29 cents. Very good. Good for them. Store sales up 6%. I'm looking for anything digital. Oh. There we go. Net sales from digital channels grew 88%. There's the reason for your pop today. So we look at the stock. Great day, obviously 25% gain on the day, huge volume. I bet you the excitement was all because of digital sales. And that's just because that's what they wanted to shoot for. So it shows that what everybody's working hard at Bed Bath & Beyond is actually working. And that's what people want to see there because that's their goal. I like it. Love it. All right, I will wrap it up there and get ready for our class here tonight. If you are one of our customers and you are out there trading, having a little bit of a tough time, let me help you tonight. We've got a something simple, hopefully, but something you can do when the markets or your trading gets a little bit wild and off kilter and you're worried, but you don't want to give back all your profits. All right, enjoy the rest of your day. Thanks so much for watching, and yeah, see you later.